Welcome back to Stocklabs, another market recap. It was a pretty good week for markets. January closed kind of soft, but then market took right back off for the start of February. We had some events, FOMC meeting, where I guess Powell was interpreted as hawkish. Market was kind of down a little bit. And, market was starting to price out the March rate hike or March rate cut. And, so there was a little bit of unease about that because we have like 6-7 cuts priced in for this week. And if we don't get one in March, then we're not getting, 6-7 rate cuts for the year. And then we had Facebook earnings, which were well received. Stock had its biggest move ever, I think. From a market cap perspective, I think it was up like 20% or more on the day. So, yeah, NASDAQ lifted, market lifted on that, and everything looks pretty good. So for the week, we had the S&P was up 1.5%. Dow was also up 1.5%. Qs only up 1.34%. Actually, the Qs started the softest like in the first half of the week, but then, like I said, that Facebook earnings. Also, Amazon was good too. It just was kind of overshadowed by the Facebook move. So NASDAQ finished 1.34% to the upside. IWM didn't do anything, down 0.75%. Crude was down 8%, 7.5%, 8%. And bonds were up 2.5%. So bond move is, looks pretty good. I mean, we had, it was softening up, like I mentioned, with the FOMC stuff, but for the week ended up, having another good week. So, the rate outlook I don't think has changed all that much, at least on the long end. And, people are kind of just waiting for the front end to start coming down. It's been coming down, but they're just waiting for it to get confirmation from the FOMC that, the rates are going to keep going down because everybody likes slow rates. If we look at the leadership stocks for the week, like I mentioned, Facebook was whole move was the earnings move. Nvidia was up another 8% this week. Amazon also up 8%. Tesla finally a green week, but only up 2.5%. It's been getting whacked the last several weeks. Microsoft up almost 2%. Apple down 3%. And Google down 6%. Google had earnings that were not well received. So, yeah, kind of a mixed bag here, but overall, up 4.5% for the week as a whole, dragged the NASDAQ higher. This is kind of like, these stocks are so big, if a couple of them make a okay move for the week, then market's just going to go up. So that's kind of just the market we live with now. For industries, you can see it's kind of weak overall. Industrials were up 1.3%. Utilities were slightly up, almost 0.25%. But rest was all down. Technology down 1%. Services down 0.9%. Healthcare down 0.5%. Financials kind of flat, down 0.3%. Consumer down 0.4%. Basic materials down 2.3%. Kind of went with the crude move. Subsector wise, not a whole lot, of note on here. We've got a couple random things that are up over 5%, but nothing too important. On the downside, we have a few more, regional banks softening up again. This facility that the Fed set up is coming to an end. Probably it's not going to end, but the date for a decision to get made is coming up. So, the nerves are setting in on if they're just going to let all the regional banks go to zero when their collateral becomes worthless again. They can't exchange it for face value or whatever. So, those were soft. That's about it. And on the breadth by market cap, we've got 1 to 5 billion stocks down 1%, kind of with the Russell move. 5 to 10 billion flat, down 12 tenths. 10 to 50 billion, up 0.5%. So that's already an improvement. And 50 to 100 billion, up 1.1%. 100 billion plus, up 9 tenths. So, the top end, when I mean top end, the larger stocks, they continue to do well. The smaller stocks continue to struggle. So this is kind of like a summary of life, right? The rich get richer, the big guys, they all do well. The little guys, they all struggle to get by. So, if you're in this range, like 10, 50 billion cap stocks and higher, for the most part, you're not having any problems. If you are dinking and dunking in the smaller cap stuff, then you have more of a crapshoot, as sort of mentioned in the past. If we look at intelligence for this week, not a whole lot on here, but it's the first time that intelligence has kind of had a little bit of a bearish skew, right? So tech is bearish this week, Ethereum bearish, and real estate bear, ETF is bearish, so bullish real estate. But there's not a whole lot on here to go by, so best not to draw any drastic conclusions. On the downside, we've got natty gas, as always, bearish. OILD, this is oil. I think this is a bear oil ETF. I actually don't know. Or it's bullish. I don't know. So NRGU, this is also, I think this is bullish. Crude, natty gas bearish, tail risk bearish, coin bearish, coin bearish, and volatility bearish. So actually, between this one and the positive side, I don't really see a whole lot to go off of on here. If we look at our sort of master oscillator, still kind of just in this mid-range, the trend is intact, so probably just more of the same. This coming week, there could be some give back because, the move post Facebook and Amazon earnings was kind of stretched on the NASDAQ. So, maybe you see some early weakness in especially tech, but, I don't think anybody is running for the hills here. I mean, there's not really any threats to the market. So you're just going to see the existing trend kind of keep moving to the upside, I think. Maybe some chop early week and then, close the week up or flat or something. And, bears are just constantly frustrated. So that's about it. We're into February, so first month is already done, and we've got 11 more to go for the year. So that's all from me. Hope you guys have a good week out there, and we'll talk to you next week. Bye.